I get that. What do they do besides call 1-800-GORGIEVA and say, help us? What's their choice set?
I think the risk when you're investing in a high-yielding economy like a Colombia is that it's very liquid, right? And once you're in that economy and clipping that coupon, getting out isn't as easy.
You're addicted to it.
Getting out isn't as easy. It's just not like overnight. Like you can sell your Colombian peso, get your dollars back. I mean, it takes time, you know. There's a T plus something days until you can actually pull your money out. And in that amount of time, if your block is big enough, you can move the market quite considerably.
Okay, fine. But then does that mean we're towards, pick the date, 1992, 1994, the August of 1998? Are we getting near a point where there's not enough oil in the engine to make the Damien Cesar world go like the Detroit Lions 6-2?
Lisa, Tom's been reading my research because he knows that this reminds me a lot of the mid-90s period. I mean, it really, truly does. To me, it's just my opinion.
I don't know what I'm talking about, and it does.
Things are breaking offshore. I mean, I say it all the time. In frontier markets that no one cares about, like Nigeria, Kenya, Ghana, currencies have been devalued by 50%. Things are breaking, but we just don't feel it here yet. And so this reminds me a lot of the mid-90s, but this time we're not as close to it as we were in the mid-90s when Asia started to roll over, Thailand, the Asian debt crisis, the tequila crisis of Mexico, etc. But nevertheless, it does feel to me to be quite similar.
Is there a long-term capital management? I mean, if you're going to go to the mid-1990s and you talk about something, if you're going to talk about something breaking, always the gloom. He was basically leading it off.
I don't like to think so, Citadel. No, I'm kidding. I'm joking. I never said that. But what I would say is, look, there are big firms out there that are not necessarily your traditional hedge funds, your traditional banks, your traditional players, non-bank financial institutions, whatever you want to call it, shadow banking, etc. Yeah, there could be some pockets of distress that bubble to the surface when things get really tight. And I think what we're seeing in cross-asset vol right now, Lisa, is the market valuations are finally responding to tight financial conditions. And we see that just alone if you look at rate vol, which is trading at a premium to equity volatility.
Honestly, we've been trying to grapple with what would break given how quickly yields have gone up. And we're talking now about the Bank of Japan potentially abandoning yield curve control. We're talking about the potential for economic growth in the engine in China rolling over. Jeremy Stein, the former Fed governor, who is very colorful with his words, said in a recent Bloomberg article, if you had told me 2 years ago that the Fed would hike by this much in such a short time, I would have said that they would leave dead bodies littered across the corporate credit landscape. I really don't have any good story to explain why things have instead remained so resilient. Are you saying that they're not? It just is taking longer.
First thing I'm saying is I have to apologize to Ken Griffin because Citadel's a wonderful company and they employ a lot of my friends and they invest really well. And I just want to apologize. I just got this vision of Ken Griffin calling me now. Anyway, no, I'm kidding. So the question was, I think, the resilience of investors in this environment?
Just in terms of when you talk about the emerging market complex, the fragilities that you're seeing, do they look akin to what people were expecting when you raise rates by 500 basis points in less than 2 years?
Yeah, no, I think so. I've been calling for this for a while. I think a lot of my peers have been calling for it. You can't really invest in EM local until the U.S. really starts to cut, and the U.S. seems to be on hold for a lot longer, and you know, that runway seems to be expanding by the minute. So, you know, I think that's why EMFX is on its back. EM local rates, I mean, they've given up so much performance in just the last month alone, and I think it's justified.
Robert Mundell, like 2000-ish, dollarize. He told Canada is an EM to dollarize against the United States. Should Argentina dollarize now?
They don't have the ability to.
They don't. Please explain that to our
generally
audience.
don't have enough dollars in the system to function, and that's what dollarization means. Peru's a little bit different. They don't have dollars.
They don't have the wealth.
Right. Correct.
They don't have the balance sheet. When people say the United Kingdom is poor, it's about wealth.
Correct.
Strange word.
Correct. And you know what I've been looking at, which is really interesting, just taking you back to Japan and looking at domestic household wealth. You want to talk about domestic households in Japan are funding in local currency and investing abroad. They all have little, trading accounts set up where they're basically buying dollars. They're buying Brazilian real. They're buying Indonesian rupiah in their PAs, in their personal accounts right now as we speak. And those volumes are exploding and have been for some time now. And that is just indicative of what's going on in Japan, that they've kept yields so low for so long that is embedded in the sentiment in how these households have to operate and invest their money in order to kind of pay for things.
But the distinction here is the people of Japan and other nations are wealthy, quote unquote. This strange word wealth, folks. versus Argentina doesn't have the underlying wealth to dollarize,
That's
right?
correct, yeah. No, I mean, that economy would not be able to function, would cease to function, if they tried to dollarize. I don't know how Milei would be able to do that. Milei is obviously the one who is a proponent of that. We have a big election coming up in the next few weeks in Argentina. But I mean, there's also, it looks like it's going to be Sergio Massa again, which is unbelievable. It's more of the same in Argentina. How does the IMF continue to get behind them?
Did you, I mean, you're big buds with Ken Griffith at Citadel. Did you go to Disneyland in Tokyo?
I didn't. I would have liked to. I'm definitely not getting the invite for next year. No, I don't think so. Not after today.
I mean, is he with us tomorrow as well? It's like every day with Damien. I feel like I'm on The View. I got to do my Whoopi imitation.
Oh, good luck with that.
I feel like I'm on The View here.
Next Halloween.
Damien, thank you so much. Please come by tomorrow as well. Damien Sassower, brilliant on emerging markets. He's with Bloomberg Intelligence. Markets on the move. Futures up 9. A nice tape here early on. Again, yen weakens. Emily Rowland of Boston next.
If you look at the economic data today, it is so significantly consistent with a downturn.
Stocks are in a bit more of a wait-and-see mode.
It feels like anytime there's a part of the market that gets a little bit of leadership, it can't sustain it for that long.
The Fed is probably going to want to keep its options open to hike more.
The Fed is just well ahead of other central banks.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television. It is an eventful day before a Fed meeting tomorrow. We'll touch on Halloween here in a moment. Trick or treat, and you see it in Japan. For Global Wall Street this morning, it's simple. Finally, yen moves. The government has not intervened in any way, shape, or form. I got a 161 euro yen, dollar yen 151, and you wonder, it's far, far away, but it's not, Lisa. Japan matters.
Japan was one of the biggest buyers of U.S. securities, in particular corporate credit and U.S. treasuries. If they pull out of the market and can actually get yield, then that's going to make a big difference. And suddenly they can get yield. You get almost 1% now in a Japanese 10-year. It's a market, Tom.
We're looking here at a number of other narratives. Just as we went to air at 6 a.m. on radio, on television, Europe in what I'm calling stag disinflation. Finally, disinflationary trend in place. Thank you, Gilles Moecken, AXA, for that. But with it, a surprise, maybe a pan-European contraction like what we've seen in Germany.
We saw a 0.1% contraction in the third quarter. It was expected to be flat. We saw disinflation. This, to me, was the big takeaway from it. Yes, people know that European economies are not doing that great, but the disinflation, consumer prices coming in, increasing at 2.9% versus 3.1%. That's really what moved the market, Tom.
Well, we're going to have to see. Apple, with their announcement last night, Lisa hung on every word. She says, let's go to the store before I go to work at 3 a.m. But other earnings out as well. We got Apple on Thursday, I think, and the 3 MacBooks you bought is not going to be in their earnings report this time around. But we've got some surprises here. JetBlue, no surprise. Caterpillar, what do you think?
Well, Caterpillar came out better than expected, and then the shares have come off. So we have to dig through the earnings and to understand what's behind that. With JetBlue, yeah, we understood that they were going to be facing some costs, but the magnitude of those costs and the magnitude of just how much their full year revenue forecasts came in, that came as a surprise. And that's why you see those shares down quite materially.
Maybe it's a weak outlook forward. We'll touch on that and under surveillance this morning as well. We need a brief, and critically, Lisa starts this morning with what matters in America: strong jobs, but wages, the mystery.
Well, this whole week is really about labor market data in all its nuances. And today, a lot of people are pointing to 8:30 a.m. as one of the key data points, even with the jobs report on Friday, even with initial jobless claims on Thursday. We get U.S. Employment Cost Index for the third quarter, which gives you a sense of full compensation and how much it's increasing, the pace of the increase. It's been increasing at a slower pace, but how much do we need to see this continue to come down to really give people confidence that we can disinflate even without taking the pain?
On radio, it's tough to see the chart, but we do charts on radio. It works. Thank you. Out in Sparta, they want to hear charts on radio. The chart is a disinflationary vector, but it's got a ways to go to get back to where we were pre-pandemic.
Correct. and this is something people are watching closely, especially in light of all the strikes. At 9:30 a.m. on the geopolitical front, we're going to hear from Secretary of State Antony Blinken and Defense Secretary Lloyd Austin. They are testifying in front of the Senate Appropriations Committee. To me, it's going to be really interesting how they try to get the Senate to kind of jawbone the House into some sort of consensus. So far, we've gotten a proposal from the House that is a no-go for the Democrats, and it's a no-go when it comes to the Senate.
I thought Oliver Crook's report in the last hour was brutal from Tel Aviv, and I'm really looking forward to Amory Horton joining us in about 12 minutes.